Welcome to Mark Arnold's Finance. I'm going to be comparing two huge pharmacy, health, and retail companies. Of course, that's going to be Walgreens and CVS. These two companies are very similar but very different, as you're going to see in this video. So be sure to stay tuned for the full comparison, my metrics chart at the end where I compare and choose a winner, and then I'll choose a winner of my own as well. So before we get started, if you're new to my channel, be sure to subscribe. I'm somebody that is very transparent, which we're gonna start with now, and I'm very excited to share my portfolio has gone up pretty massively. So let's take a look. We will see here that my portfolio performance is now in the green by 8.66%. That's $3,471. Just a few months ago, I was in the red. Now I'm up over 3,000 bucks. This is why investing is so important in quality companies and sticking it out. So this has been great. I'm very excited for the future of my portfolio, and I probably will be making some changes, so stay tuned to my channel. There's a lot that we will be going over the rest of this year. So let's get started with this video. We're gonna start with CVS. CVS was founded in 1963, and they provide health services in the US under 3 segments. So the first segment is the health care benefits segment, and this offers health insurance products. We'll see later that they do own a health insurance company, which is part of this segment. Then they have the pharmacy services segment, which offers pharmacy benefit management solutions and operates pharmacy retail stores. Of course, we all know CVS has a pharmacy portion to them. That's, I think, how they're most well known. And then they have a retail LTC segment, and this sells prescriptions and over-the-counter drugs, consumer health and beauty products, personal care products, and provides healthcare services throughout its Minute Clinic walk-in medical clinics. Say that 10 times fast. So yeah, they have these Minute Clinics where you can go in and get some help with any easily treatable sicknesses or things like that. And it seems like this is where they're really aiming for growth. Now, 85% of Americans live within 10 minutes of a CVS store, and every day 4.5 million consumers visit their stores. So there's a lot of locations. In fact, as of December 31st of 2021, they have 9,900 retail locations, 1,200 Minute Clinics, and then they have their online retail pharmacy websites. So they're almost at 10,000 retail locations. There are CVS's all around me, as well as Walgreens. I think where I really go to CVS more often is in the Target stores. They must have some type of contract with them, and it's very convenient because, as you know, you go into a Target, you're going to be buying stuff, and if there's just that CVS there, you're going to be more willing to have some of your health-related care needs taken care of. They do own Aetna, A-E-T-N-A. If I'm saying that incorrectly, I apologize, but this is a health insurance company, and that's where their health care benefits segment comes into play. So they do offer different types of insurance, which is great for consumers. Then we have CVS, and they plan on getting into primary care by the end of the year. So that's physicians, nurse practitioners. This is something where they are really focusing their future on and where they feel their growth will be. So it's very, very exciting. If we look at their rumored purchase of Signify, which is a home care company, so I think CVS, they're trying to recreate the whole health care related segment of getting care. They want to make it more efficient and cost effective for customers, so at-home care might be part of their future. This is just a rumor, but if we look at Signify a little bit more in depth, they have $10 billion of healthcare spend managed in 2021. They have visited over 1.9 million homes in 2021. They have over 10,000 providers in network. They have 700 plus health systems and provider groups, 600 plus clinical and social care coordinators, and 10% plus reduced hospital readmission rates with their customers. So right there, what I like so far is that this seems to be a very effective company. So if these rumors become true and CVS does buy it, this will be huge for this company. This will really propel them further in their plans for the future, especially with getting into the primary care type of business. CVS recently had earnings. We will see here that their earnings per share came in at $2.40 versus the $2.17 expected. So they beat there. Their revenue came in at $80.64 billion versus the $76.37 billion. They beat there. So far, great numbers. And really, overall, their earnings was great. In fact, their forecast for the future was somewhat positive. They raised it, actually. So a lot of companies this year have reduced it or kept it the same, but they increased it. This is fantastic. The fact that they're raising their full year forecast says a lot about this company and how confident they are that they're going to have some good growth. Now, the CEO has put forth a goal for this company. CEO Karen Lynch said the company's strategy of adding more health services is boosting sales and deepening customers' relationships. She is quoted as saying, "Our team is delivering meaningful progress on our strategy as we're striving to become the nation's leading health solutions company," she said on the earnings call. And she added that the company will continue to build on its powerful momentum. So far, we've seen a lot of great things with CVS. Now, I want to talk about their foot traffic. CVS saw mid-single-digit increases in trips and a mid-single-digit rise in average basket size during the quarter. Same-store sales, as we saw, increased 8% compared with a year ago. And a lot of that is due to the at-home test kits. I am cautious to say that word because sometimes YouTube will flag that. So I'm going to use the word pandemic. In the pharmacy, same-store sales rose 7.6%. In the front of the store, same-store sales jumped 9.4%. So overall, the foot traffic is going up. Their sales are going up. This is fantastic. This is what you want to see when you own a company. Not only that, but this company does have what's called the Care Pass membership. Anytime a company can have some type of membership where there might be either reoccurring revenue or create a customer to just become more loyal, that right there is just gold for a company. The program, which offers discounts, free 1 or 2 day shipping, and other perks, costs $5 a month or $48 on an annual basis. Now, again, reoccurring revenue is a great thing for a company, and at the very bottom here I highlighted this, which is phenomenal. CarePass membership is up 26% year over year. This is a great sign. This is boosting up your dependable reoccurring revenue and your customer engagement. You know, if they have that, they're using it, they're going to be more likely to stick with CVS and go there over every single time. So that's a huge plus for me. The pandemic-related sales are dropping, but they are still strong. Regardless of this, we saw their earnings were great. So nothing that's an issue for me there. Let's look a little bit deeper dive into some financial information. So we'll see their cash balance over the last 5 quarters overall has gone up. So if you take quarter 2 of 2021 to quarter 2 of 2022, it went up very healthy. So their cash is growing. I like to see that. But what about their long-term debt, right? Sometimes cash goes up, but so is debt. So that kind of offsets it. But I'm happy to say their long-term debt is going down every single quarter. So this is phenomenal. I love to see this. What about their sales? As we saw, they did report sales are going up, and it definitely reflects in their financials on their income statement. Every quarter, it is going up, and actually at a very healthy rate, which leads to their net income, because we want to factor in any type of expenses. And we'll see here that the last quarter was their highest of the last 5. So even though their sales are going up, they're still managing their expenses very well. Lastly, let's look at their fundamental analysis. This is a great thing I always like to show. And they have a phenomenal outlook analysis on valuation. They're considered highly undervalued. The quality is almost a perfect score. It's at 99 out of 100. Their growth stability is just slightly on the high end, so that's good. And their financial health is phenomenal at a 98. So this, I don't ever see too many companies with this high of scores, so this is great to see. So overall, what I see is a company, CVS, that is growing, innovating, and preparing for the future. So to me, I really didn't see any negatives. Let's look at Walgreens Boots Alliance, or as we know it, just Walgreens. They were founded in 1901, so an older company, and it's a pharmaceutical-led health and beauty retail company, and they have two segments, the US and international. So in the US segment, they sell prescription drugs, an assortment of retail products, as well as provides central specialty pharmacy services and mail services. It operates 8,965 retail stores under the name Walgreens and Duane Reade brands. So just shy of CVS's 9,000, almost 10,000 stores, they're at almost 9,000. So they're about 1,000 stores behind CVS in the US. But their international segment, which sells prescription drugs, an assortment of retail products, and optical practices, operates 4,031 retail stores in the UK, Thailand, Norway, Republic of Ireland, Netherlands, Mexico, and Chile, and they have 548 optical practices. So combined, they have more than CVS, but just in the US, it looks like CVS has more stores. So let's dive into a few more things with Walgreens. If we look at their sales, we will see here that Walgreens, for the period ended on May 31st, the revenue declined 4.2% year over year to $32.6 billion. Below, analysts were expecting 32.06. So 32.6 versus 32.06. It came in slightly at a beat, so that's good that they were higher than expectations. But a big part of that is due to its pharmacy sales in the US. Now, we're talking about the decline in revenue year over year. So the pharmacy sales in the US, which were down 9.7% during the period, and the company comparable retail revenue in the US rose by 2.4% when excluding tobacco. And internationally, sales grew by 0.3% year over year. So it's mainly a downtrend in their pharmacy sales, which is interesting. I don't think that's a great sign. So let's move on. What about profits with this company? If we look into this, we will see here that in the company's net earnings of $229 million, which were a fraction of the nearly $1.2 billion that Walgreens reported a year ago, so a huge decline. But as displayed, and I'll show the chart in a minute, there were two glaring areas responsible for the drop in net income: selling, general, and administrative expenses, and equity investments. So we'll see here, I highlighted in yellow at the bottom, these two were huge expenses for this company, or downtrends, that led to a huge decline in their net income. So not a great sign, and the SG&A is down $683 million for an opioid settlement in Florida. And I hear that California is looking into some type of litigation as well with Walgreens, with the opioid-related whole issue there. So they're getting hammered with some lawsuits, it looks like, and it's hitting their books, which brought their net income down pretty massively. Also, I found this interesting when I was researching them. It looks like they're wanting to sell their UK portion of their business. So Chief Executive Officer Rosalind Brewer's strategy for Walgreens is under scrutiny after the company abandoned its planned sale of the UK Boots chain, expected to bring more than $6 billion, saying it failed to get the desired value. The decision to hang on to Boots is likely to impact the company negatively in the longer term. This was interesting. I didn't realize they were trying to do this. Looking into it, they stated they had some good offers, but as soon as the economy started going down after January, the offers weren't that great, so they decided not to take it, which a lot of investors are thinking, you know what, you could have took that money and used it for some great things, and now you're having to hold on. So not a great thing. We'll see what their plans might be in the next couple of years with the UK side of things, but that's not looking like a positive thing for Walgreens. So what about, they have their own, CVS has their minute clinic, but Walgreens has their own type of care. The company has been looking to invest in its Walgreens Health unit, which is bringing more direct patient care into its stores. The newly formed business posted quarterly revenue of $596 million, and Walgreens is diving deeper, adding primary care centers to its U.S. locations and partnering with health insurers The company also launched a clinical trial business designed to help improve diversity in drug trials by making them more accessible to patients. So they have these healthcare clinics, just like CVS has the Minute Clinics. And we will see here that their healthcare clinic, I kind of looked it up. What kind of services do they offer? So it says their clinics providers treat illnesses, aches and pains, minor injuries, and skin conditions to prevention and monitoring of management of ongoing health conditions. They also provide a wide range of quality healthcare services for the entire family. So, it's kind of like a clinic for the less severe issues, which is going to be convenient if you don't have to go to a hospital for something more serious. You can go to a CVS Minute Clinic or this health clinic with Walgreens. And this is where Walgreens is focusing, just like CVS. So they're both going full force on, kind of having this provider-led clinics. And CVS is going, I think, a step further with the home care as well. The vaccinations are down, but the whole pandemic-related, sales are still strong, just like with CVS. So Walgreens is really trying to lure in more pharmacists, and they are offering bonuses up to $75,000. We saw their pharmacy sales are down, so I'm not sure exactly why, but they're really focusing hard on hiring some pharmacists, so that maybe they do see some strength there. Now for Walgreens Future, CEO Ross Brewer outlines a plan to make healthcare its growth engine, just like CVS. So they're both competing heavily for this. So Walgreens Boots Alliance CEO said the drugstore chain's new healthcare division will drive growth. The company plans to open hundreds of doctor offices, offer in-store consultations with nurses and pharmacists, and put a healthy spin on its front-of-store merchandise. It acquired stakes in several healthcare companies, including primary care company VillageMD. So again, they're really focusing on this whole provider-led care, these clinics, and this is where both companies feel there's some huge growth opportunity. So let's look at some of their financials. If we look at their cash balance, we will see that from last quarter to this quarter, so a quarter year ago to now, the two highlighted in yellow, their cash did go up. So to me, that's a great sign there with their cash. But what about their long-term debt? As we saw with CVS, it was going down. But with Walgreens, their debt is going up. So their cash is going up, but so is their debt. So that's going against them, and I don't like to see that. What about their sales? If we look at Walgreens sales, we will see here that they are going down. This is, like they're saying, the revenue's down year over year, the sales are down year over year. This is not a good thing as an investor to see. So if we look at their net income, let's see if, even though they're declining in the sales, are they handling their expenses well? So we will see here that Walgreens, with their net income, it's also going down. So they're not handling their expenses well, their sales are going down, their debt's going up. It's just not a pretty story overall. Let's look at their fundamental analysis. If we look at this for Walgreens, they are considered undervalued, but not as much as CVS. Their quality is a 60, where CVS's was extremely high. Their growth stability is low, where CVS was just over the middle mark. And their financial health is considered high, so overall they do deem it as a healthy company. But I think it's that growth factor, right? We saw decline in sales, and that's just never a good sign. So the growth just does not seem to be there. So before we get into my metrics chart, I wanted to show a comparison on some ratios. So the price to sales ratio, you'll see in that blue-purple is Walgreens and the orange is CVS. Walgreens is definitely a lot cheaper there. In the middle section is their PE ratio. Walgreens is a lot cheaper there. And then with their price to book value, Walgreens as well is a lot cheaper. So many people are probably seeing this as a values play, whereas CVS might be more of the growth play. But let's look at my metrics chart, and this will further help us clarify a lot more and help us choose a winner, and then I will choose my winner. So let's start with the PE ratio, trailing 12 months. CVS is at a 16.95, where Walgreens is at a 6.8. So definitely Walgreens is on a PE ratio aspect is very cheap and inexpensive, but you got to be cautious because the quality of the company can really sway this. CVS might be the better deal even though its PE ratio is higher. So though with this, I'm going to give the green to Walgreens just because I think as far as a value play with a low PE ratio, it wins there. Now the earnings per share trailing 12 months versus prior trailing 12 months, CVS is at a 12.64. Walgreens is up a massive 159.47. But if we take that out to 5 years, it's a different story. CVS is up 3.92% and Walgreens is down 9.65. So something caused their trailing 12 months versus the prior 12 months to go up pretty massively, but overall the 5 years is what I am looking at more strongly. So they each get a green in each area, but I like CVS overall when it comes to their earnings. Revenue. CVS over the last trailing 12 months is up 10.73%. Walgreens is up 4.59%. So CVS takes it here at over double. The revenue growth the last 5 years is much healthier to 10.47% versus Walgreens 2.46%. So revenue has not been a thing that Walgreens is succeeding at, where CVS is doing a good job. So cash flow growth, again, a big difference here. CVS is up 9.77%, Walgreens is down 7.6%. That is something you do not want to see. That means they're hurting and they're having to spend a lot more cash instead of being able to hold it or grow it. The dividend yield, CVS is at a 2.11, where Walgreens is at a 4.79. So as a dividend play, Walgreens is probably more popular. But if we take it out to their 1 year dividend growth, CVS has grown more at 10% versus Walgreens 2.67%, and the dividend payout ratio is virtually, very close. CVS is a little higher at 36%, where Walgreens is at 33%, so they take the green there. Now, the debt to assets is also very close. CVS is at a 67.2, where Walgreens is at a 66.4, so Walgreens takes the edge. Now, the profit margins. CVS is at a 17.81, where Walgreens is healthier at a 21.03, so they take it there. Both their shares outstanding have gone up the last quarter versus the prior, so that's something I don't like to see when they dilute shareholders. Now, analyst score. I don't think I've ever seen this high of a score before, but they are very bullish on CVS at a 9.9 versus Walgreens 7.3. So they're bullish on both, but they're extremely bullish on CVS. Now, I rate the future of these companies on my own score, 1 being the worst, 10 being the best. I rate CVS an 8. They had great overall financials and just news on their, trying to expand their increase in sales. Overall, I think this company has a strong future. I think they'll keep that momentum going. And if they can continue to expand with the at-home care and their provider network and the minute clinics, this company can be very, very successful. And maybe that's why analysts are so bullish. Where Walgreens, I give them a 6. They're struggling with their financials, but they are trying to expand into their own healthcare clinics. So because of that, I think, a 6 is appropriate, where it's not going to be a strong growth company, I feel, but I think they can find ways to be successful. So with that said, CVS has more green, so they take the win when it comes to my metrics chart. But overall, what would I pick between these two? So this was hard because you have CVS, which is more of a growth company, but they are more expensive, and you have Walgreens, which is probably more of a value play, more of a dividend play, but they're really struggling with their financials. So when it came down to it, I had to pick quality, so I'm picking CVS as well. I just think they're the stronger company. I think they have more of a chance because of their strong financials of expanding into those minute clinics, provider at-home care situations. And the fact that they're in Targets is good. Like I said, that's why I visit them more often myself, because it's more convenient instead of having to go to an individual store. I don't know what Walgreens might be in, if they're in any type of stores. Let me know if they are, but I know CVS is in Target. So it just had to come down to quality. CVS I like a lot more. That's one that even with the cheap Walgreens stock, I still would rather buy CVS in my opinion. I do think they have the brighter future, But I don't blame you, and don't think it's wrong to take a risk with Walgreens as a value play, because they are so cheap on so many metrics that you really can still do well with them long term. So that's what I think. Let me know which company you would choose, CVS or Walgreens, and let me know why. I think these companies, they're so similar but so different. As we saw, they're both really focusing on the provider care side of things and opening up these clinics and even more. And that's where their growth is going to be. I think both will be successful, but I think CVS will just be more successful. And that's just my opinion. So thank you guys so much for watching. I do have to give a shout out to one of my subscribers who recommended this comparison. Thank you so much. I learned a lot, and I'm going to put CVS on my watch list. I think this is a company, if we have a downtrend this year, I'd consider jumping into. So with that said, guys, we'll see you next time on Mark Arnold's Finance, and have a great day. See you next time.